Hello friends, welcome back, and this is today's bonus video. Now I say today's bonus video, it has been a while since I've done one. I'm Rocky Outcrop, this is the Rocky Outcrop channel. We do daily technical analysis for Bitcoin, Ethereum, Chainlink and Tezos. Now yesterday somebody asked me to look at the Ethereum Classic chart, and it's been quite a while since I've done it. In fact, the last time I was looking at it was probably during this Head and Shoulders event over here, where we saw the prices drop down towards those lows in the 14th of March. It was a wonderful example, actually, in the way it panned out in terms of Head and Shoulders, because although it doesn't necessarily look like that on the 2-day or less so on the weekly chart, but you know, overall it was a good one, and we saw that the prices dropped down to our target here at $5. In fact, lower. What am I saying? Sorry, down here towards $4, and gave us great entries. We had a target in around that area, and if you watch that video, I'm not a financial advisor, no, this is financial advice, but that was indeed a trade that I played myself. Now, I've not looked at this chart really since then, in fact, so all I know is that the ones that I bought down here as a result of that are higher now, and then maybe this is a good time for me to look at this and ask the question myself, should I relinquish some of that? What have we got in terms of volume? In general, zooming out, the volume has more or less kind of picked up in this chunk here, in this entire section, since, you know, we started going up the way at the start of the year there. But this year we've seen a lot more volume on the Coinbase chart, at least for the Ethereum Classic dollar pairing, than there had been, say, you know, in the previous year. In fact, we've probably already had more trades and activity happen this year than we had in the whole of last year, looking at that volume down below. So, well, it's hard to say in terms of just, you know, just bringing this exclusively onto the chart. We can say that perhaps the volume's been diminishing ever so slightly, and we've been slightly consolidating in a period here. Overall, we have increased volume, so that's kind of good to see in the longer term scenario. What do we have in terms of, just generally speaking, we have an uptrend. In other charts, it's kind of easier to see that there's perhaps potentially you know, various different wedges and things like that. Let's start off on this one and just go ahead and use the parallel channel tool. Make sure that, yeah, everything's fine down below. I want to do this on linear. If I draw this up the way here, lift it up and put a ceiling on it, is this good enough? You know, this here is maybe a bit much. You know, maybe in fact we had a sort of fake out from this and broke back down. In general, this is what we're kind of looking at overall for this one. So, well, let's have a look down then at the current price action, and I'll just get rid of this channel because I wanted to point that out and I've done that now, so that's good enough. Let's look at where we've been over the last wee while, and we have a more consolidating type feature on the chart. If we draw that down the way there, and we draw this up the way here, then we can say that perhaps there is some sort of symmetrical triangle feature happening just now for us. Could we have had this drawn in differently? Well, I suspect had I looked at the charts previously, it could have looked like this. There has been an increase in volume as the prices have moved up out of this area, so I'm not willing to say quite yet that this has been this is just purely a fake out. But should we drop any further back down in terms of going past the 21 EMA, then I'd be happy to say we're still inside this triangle. I would like to see the prices be supported here in general and move on up from the $6.50 area and then towards the upside, and actually do and continue that on the way, rather than break back into this triangle here. I would like this to be a breakout, but the volume really isn't actually anything to write home about quite yet, which isn't that odd given that how, you know, it could easily be that we're just still consolidating. Let's face that. If we do need to come down, the 50 simple moving average here at 617 and our upward sloping trend line would be the first, you know, area of confluence. And if I look over here at the VPVR, you can see this node here coming in at this area. It would be good to see yet again this operate for us if this does happen to be the case. We're quite far into this if this is the shape of this thing. Of course, I'm always a bit skeptical when it comes to two diagonal lines on a chart because of the subjective nature of these things. But, you know, could this fill out a bit more just even and then break out? Well, it could, but we're quite far into it now. Now, if things break out early, then they get front run is the terminology, and quite often you get a less sort of significant move as a result, which is often looks like a fake out. And actually, the way that you talk about that is that you got the pattern wrong, and it was probably just a channel or something else instead. As we can see on the Bitcoin pricing, in fact, in the way that, you know, if this was an ass ending triangle, ending triangle up here, and in fact it's actually just a descending triangle, you know, in that sort of a manner. Oh, let me go back. Am I going to be able to go back to this Ethereum Classic chart without having to add it to my favorite? Yeah, great. So here we are. Could this be the case? Well, if we go overextended in here, then perhaps, you know, you get a more significant move. And what would the measured move be off the back of this? Well, you can just take one like this as an example, really, and try and say, well, if we do break out towards the top side, the maximum measured move that you'd really be looking for, if you're a real greedy so-and-so, would be $8.80. And if you were to go down towards the downside, I suspect this will be kind of scary looking, then the lowest would be $4 or so in terms of the maximum measured move. And I call it maximum. Now the textbooks call it minimum, but I call it maximum because I like to temper the FOMO aspect of that, as people watching videos on YouTube are likely to sort of mishear that sentence and think that that if I say minimum measured move, that there's some sort of expectancy on my part for that to be the case. And of course, as I said before, these things so often fake out and change one pattern into another, and there's a Gestalt psychology on the go here, and that is part of what people mean when they say that the markets are designed to remove you from your money. So looking down here, that would be our previous low. Could we have that? Well, it would be a second bottom here. It could be possible, you know, it would be, and it could be part of the overall bottoming formation on the chart. So that could happen. I would draw a cautious note on that sense. That could happen, and we could then see the prices move up thereafter. Indeed, we could. And if we went up here, what do we see looking to the left? Well, you know, the shoulder on this head and shoulders, a lot of volume in here. I'm surprised it doesn't turn up more on the VPVR, but I guess there's a lot of volatility in this area, you could say, and I would expect the prices to go up to there and certainly meet a good degree of profit taken should that be the case. If I want to draw in a Fibonacci sequence, just a retracement going wick to wick using this area here, you can see, if I just stretch this right the way across, that as the prices moved above 570, they created a valid Fibonacci, and up here towards the $7.20 area is where the 382 is. Now, if we were looking at this and talking about fake outs, this would be kind of where I would call fake out territory. This is a fairly, you know, that past this area could indeed be risky in a sense. You have a previous high here, you know, you could come up and not get the full measured move, as we've said so often so far in this episode alone, and see the prices turn around about there at fake out sort of zone. So I would watch out for that if that was the case. Indeed, for the move towards the downside, the same logic applies at 578, where we see the 236 Fibonacci there as well. If we want to look at this as zoom on in again, I'll get all the drawings off the chart just so we can see what we're dealing with here. That this low is higher than this low, which is higher than this low, and this low is lower. No, it's class B. No, we have class B. No, we have just class A, but it's very, very shallow. We have a touch of bearish divergence between these two lows. That's okay, given that it's quite obvious that we're consolidating in this range anyway, despite the recent low and then higher low and high and higher high. There is a touch of bearish divergence between these two if this was a downtrend, but it's not a downtrend. Sorry, bullish divergence, hidden bullish. I've said that all wrong. God, I'm sorry. That's a function of me speaking slowly. Let me just do this section again real quick, right? This here low is lower than this low. This high is lower than this high, so we're looking at a slight upward trend. Looking at this area here and seeing this RSI is lower than this one. That's called hidden bullish divergence, continuation divergence. That's good to see. There's as well over here, there's no bearish divergence, and looking at the RSI, the peaks here, there's no bearish divergence there. So if anything, there's a touch of hidden bullish divergence between this low and this low, which is helpful in terms of thinking about the breakout with the potential chance of us going towards the upside. Indeed, to reiterate, 753, where the previous high is the real previous high. And we'll need to look at how these things operate in terms of the real previous high, because the real previous low to this one is over here, you know, and the real previous high to where, you know, is this one at 753, and those are the areas we need to look out at, and that ties in with our fake out discussion we had a moment ago. Let's go to the Ethereum Classic versus Bitcoin pricing. Unless you want to look, you probably do want to look down a little bit at the 12-hour and see if there's anything on the go here. High, high, higher, high, higher. Yeah. Okay, so we're good in terms of not having divergence there during this period. 4-hour time frame. The 4-hour time frame I'm not going to look at in terms of this bonus video. I'm going to go over to the Ethereum versus Bitcoin pairing here actually instead, looking at it on Binance. What have we got on the go here? Let me just see. Well, if this is the start of an uptrend, did it have? It didn't have bullish divergence on the lows here on the run up to this before it started going up. It didn't have that. So it doesn't have like that extra impetus, but it also doesn't have bearish divergence in this section here. If this were to become an uptrend, so far with this high, this low, this high, this higher low, and this higher high, so far is operating without the divergence, and that's good to see. So things are looking fairly healthy there. A higher low could come in anywhere, of course, down to that 6778 number there, or indeed down is if you just discount this as part of the overall upward move, which is okay, then it could come down to that 6408 territory. Let's go down to the 12-hour time frame and look for something. And it's the same scenario. And go to the 4-hour time frame on this one then, since I didn't on dollars. And it's the same scenario. Apart from the MACD is actually bearishly divergent between this high and our most current high. What about this high in the stochastics then as well? Let's look for that for confirmation. No, that's also bullishly convergent. Things are maybe potentially turning around here. Maybe this is the bottom that we were looking for in terms of this price action. The previous low here and here doesn't have that bearish divergence, but in terms of this low and this low here on the RSI and the stochastics, and indeed the MACD, which is this one here, this low and then this low, that is bullishly divergent, quite distinctly. In fact, if you look at this increase here, and sometimes it's hard to tell on the RSI when you're just doing it by eye. Yeah, of course, yeah, it is there as well. So we had bullish divergence in the run into this, which then led into this upward trend. That's good to see. Let's see, we could have another higher low come in, you know, up to that 7,000 area, for instance, just purely on this chart here, without breaking the sort of structure of this previous high. And indeed, if you just wanted to go to be sort of stringent on yourself, 6,700, like we said before, is where you would be looking for that at. We have the chances of a golden cross on the 24 or on the 4-hour time frame. Here on the 24-hour time frame, there is a death cross. Now that's to be aware of. So that's a bearish thing, and of course this volatility so far has taken us up to this price action. This would be the most bearish thing that I would like to point out so far, in fact, overall for us on the chart, because if the prices then turn around from here, maybe, you know, this testing of the moving averages is the confirmation for us. Of course, if we move up above there, this could unravel itself. Is there examples on this chart of that happening? Well, yeah, there is actually right here. So you could see something along the lines here where there is this golden cross which immediately came back down and became a death cross again. So could the same sort of thing happen on this chart here? This is not fractal analysis in any way, and just making the point that these things could undo themselves. And if I want to look here as well, we've been doing this on the other coins recently. Change this to 70 and 280 and ask the question, you know, how's that looking? It's still in golden cross conditions. Let's hope that that manages to maintain itself. It's moved above the 50 simple, so we can expect reasonably to see a slope towards the upside start happening should prices maintain themselves there. That's good to see. And I'll wrap up here by looking at that moving average combination on the dollar prices and say thank you so much for tuning in. I don't know how much context this has put on your trading. I know somebody in the Discord said something which I've not even mentioned yet in terms of 6-1 or so. I think possibly maybe they did in terms of dollar prices before going up. That could be realistic to that person, especially including a fake out from this area and catching the 280 simple moving average here, which is coming in at that area right there, that which we spoke about. the 6-1, yeah, so the 70 and the 280, you've got it correct. Yeah, and you can see this upward slope on this. I can see this coming in for a golden cross. Should the prices break out towards the upside, or indeed even fake out down here, then turn around with perhaps even potentially put in yet another higher low on this chart, then go towards the upside, we could be in for some golden cross action in the future, and that would be tasty enough to see. Okay, that'll have to do. Thank you so much. I went on a bit longer than I intended to for this particular video. Who cares though? It's been fun. Thank you so much for tuning in. I'll catch you in the next episode. Share this video with a friend if you've got one that you think would like it as well, by the way. So much obliged. See you next time.